Welcome back. Yes, we continue considering options about how we need to improve the economy. We're joined this morning by Mr. Joseph Agbenla, who is a retired Surveyor General and Permanent Secretary Office of the Surveyor General in Lagos. Thank you for coming on this morning.
Thank you very much. Good morning.
Well, yes, we've had some of the suggestions made at that particular forum or summit, but you also do have some interesting perspective. You seem to tie some of the key decisions we should be taking to the political structure.
The first and foremost, the opinion that the interest rate being given by banks to would-be borrowers is quite high at this recession time. It is my considered opinion that the interest rate should be on a single digit so that the economy can grow. 25%, 30% is an aberration in this situation that we are now. So it is my opinion that the Minister of Finance should liaise with or have sort of bilateral discussion with the central bank governor to make this economy to grow, to get us out of the recession that we're in. For example, in US, when they went to recession, their interest was 0.25%. In UK, it was 0.6%. So I consider, how can we go out of recession when our economy, our interest rate is 25%, 30%? How can you make people to go to bank, borrow money, and invest? There are so many. Nigerians are rugged. Nigerians are very strong people, and they are very innovative. Okay. If given the chance, individually, we will go out of recession in, less than a year.
We'll come to some of the other points which you've written about, but about this particular point, you know, that there are some other arguments which some have proffered, and then there was this school of thought that the manufacturers, some of them were spoken to, and they tabled options to them and said, look, if you wanted the interest rate to be lowered, or would you want Forex, access to Forex to do your business? Which would you prefer if you were to choose one? Because I think the authority at that point was able to provide one, and we understand that they said the manufacturers preferred access to Forex as opposed to lowering interest rates. If that were the case, what do you think?
Well, I think all those options have to be harnessed together to make sure that, you know, Nigerians are not or pushed to a brick wall. What I meant by that was this: that both Forex and interest rate are ingredients to economic growth. In this situation, for example, you want to buy Forex for now, the rate is 470, 475, and whereas years ago, you know, I could recall when I was living in Nigeria, dollar was 42 kobo. That's 78. So if you consider that and the interest rate, you will see that they have a lot to do in common, in the sense that if the interest rate is lower and the Forex too, the government can use all their resources to make sure that it is accessible to these manufacturers and even will-be importers. I am of the opinion that you don't need even to be importing finished goods if you want to really, you know, industrialize our nation.
Not necessarily importing finished goods with those Forex. I mean, some of them could be for purchase of raw materials to aid manufacturing, after which they could then export. It could also be part of the equation.
But it is my opinion that the two options have to be considered by the government.
I think that this, sorry to interrupt you, but I think that this argument has gone on for quite a while, because I recall that the penultimate monetary policy monetary policy committee meeting of the central bank, we heard the Minister of Finance asking for a reduction in interest rates by the central bank, and you understand what sort of controversy was sparked then. The CBN wasn't quite happy because it felt that, you know, it was being pressured unnecessarily by the Ministry of Finance, and they wanted very strongly to retain their autonomy. And they also say, we're doing what we consider best for the economy. We're looking at inflation rates, which is, you know, skyrocketing as it were, and there is is still so much liquidity in the economy, in spite of the fact that we're in a recession, and we as central bank must do something to that. I think his argument is going to go on for a while. But if you look away from that, because yes, we'll continue to put pressure on the areas, on government to do what is right in terms of ensuring that people have the monies that they need. But then, what other suggestions would you proffer aside, the interest rates standing?
I think
coming down.
The manufacturers too can come to a roundtable conference with both the ministry and central bank. If they said 2 or 3 heads are better than one anyway, and the central bank does not have molecular wisdom on its own. On its own, so it is my considered opinion that if all heads come together and to help the government to resolve this issue, we will get out of recession in no time than how we're going now, because Nigeria is not smiling on people, and people are really crying.
Well, we'll take a look at more options in just a moment, because we will take a break. We'll be back afterwards.